All right, folks, the battle lines are drawn. Major Wall Street firms and strategists, they continue to preach doom and gloom. Mike Wilson had the hot hand last year. He says, do not buy this rally in front of the Fed report. He's not the only one, though, folks. He's joined by J.P. Morgan. They're saying that the rally is likely to fade. Meanwhile, here's the thing. Some of the things that are interesting is not just about stocks, folks. Take a look at this. Wall Street has never been this bearish on treasuries. Look at the bets right here. So between stocks and treasuries, right now they're looking for nothing but pure doom and gloom on Wall Street, and it doesn't stop there. Here's the problem, though. The data keeps getting better and better, and incrementally so, as a matter of fact. But this morning, the Employment Cost Index, the ECI, you don't hear about this a whole lot. It really continues to move down and down. So overall, it was down 1%. Street thought it would be down. I mean, not down, but the pace of growth is at 1%. Street thought it would be 1.1. I think more importantly, though, private industry wages and salaries at 1%. Just a couple of quarters ago, it was 1.6%. This is significant. This is a significant two-quarter drop. Maybe it doesn't impact the Fed tomorrow, but it certainly will. Meanwhile, it put a little bump in the stocks. You can see that we're gaining momentum as the session goes on. And the CME, the Fed watch, now has moved back to a rate cut in November. Yesterday it was in December. So just maybe, you know, maybe the Fed will see the light, or maybe I'm looking at it the wrong way. I'm going to bring in Bianco Research President Jim Bianco. And Jim, first I want to start with this ECI report today. We know it's not going to alter the decision for tomorrow, but in my opinion, lots of evidence piling up for the Fed to at least admit that they're thinking about maybe a pause. Your take?
I'm not there, Charles. I think that this Fed is more worried about, look, inflation has peaked. Inflation's coming down. And I've said this on your show many times. That's not very important. What is important is it going all the way back to 2%? 1% ECI, and that was for the fourth quarter, is a 4% annualized rate. That's double what the Fed wants. It's going in the right direction, but is it going to get all the way back there? I've been in the camp that it won't. It won't make it all the way back there. And I think Jay Powell's in that camp as well, too. So he'll say, look, things are moving in the right direction, but we cannot think about pivoting. Yes, they're going to pause because they've already pre-announced that they're going to raise rates another 75 basis points to get it to 5%, and then they're going to hold. If they raise rates tomorrow, they're going to be within 0.5% of that target, so that shouldn't be a shock. But if Wall Street's hoping for cheaper money, I don't think we're there just yet.
I think, though, it's not necessarily cheaper money. As I was saying, that maybe the cuts come late this year, but I just think maybe calling off the war, putting a pause, you start with 4 75 basis points hikes, a 50 basis point hike. This has been fairly aggressive by historical standards, and I think a lot of folks on the street would just be happy if the Fed would take a look, just step back and say, we want to see our handiwork, rather than saying we're committed to pounding this with a mallet no matter what the data says.
I think that they've already announced that. They've already announced that they want to go to 5%. Like I said, that's 3 25 basis point hikes. They're going to give us one of those tomorrow. So they're almost there right now. But the assumption is pause is a prelude to cuts later this year. That might be a little bit aggressive. Pause might last all the way to 24. And look at what's happened in some of the European data numbers and stuff. The inflation numbers have kind of surprised to the upside. If we see that happen here, happen here, we could be talking about more rate hikes later this year instead of a pause. And
I think it's unreasonable to think that, all the inflation data just goes down in a straight line. Nothing moves like that. We'll probably get that sort of stair-step thing. I want to point out a tweet that you put out. I found it very intriguing. You were referring to an article from Fortune, 57% of Americans can't afford a $1,000 emergency. But you also mentioned that creating a booming wealth effect will not help these people stretch their dollars further. So to me, it feels like, is there middle ground between, putting too much money out there to chase too few goods, inflation 101, but also causing millions of people to lose their job? Can the Fed find some sort of a middle ground?
I think that's what the Fed is looking for. And you're right. Let's remember that those 57%, most of them don't own assets. They don't own a portfolio. They don't own a home. They rent. So if the Fed were to pivot and the market was to go to the moon, it's not going to help them. And let's also remember, too, that as of now, the data is not showing that anybody's losing their job. We still have a 53-year low in the unemployment rate. We've got under 190,000 on initial claims. So you can't really make the case that there's been any damage to the labor market. Maybe that comes later this year, but not now. So the Fed is looking for that middle ground. And you're right. I think what we did in 2020 and 2021 with the CARES Act and the stimmy checks, that was way over the top, and it created way too much of a spurt in inflation and meme stock mania and everything else. And the Fed is trying to correct from that. I think they are trying to find that middle ground. Whether or not they could pull it off remains to be seen. But you're right that this is where their focus is. The focus is, what about those people that don't own stocks and don't own their homes and live paycheck to paycheck? They can't keep getting 4% raises in a 6% inflation world. They lose. They lose and they lose. Yeah. And that's where Jay Powell's focus has been.
All right, Jim. Listen, I always appreciate talking to you. Can't wait for tomorrow and to get you back on it to follow up on this. Thanks, buddy. In the meantime, let's bring in Key Advisor Group CEO Eddie Gabor.